Thank you for joining us for our last installment of the Own Your Career Summer Side Hustle series. Today, we're going to talk a little bit about side hustles and taxes. Before we get started, I do want to make sure that everyone is aware this is not going to be a comprehensive overview. This is just a way to get you started, give you a general understanding of what you need to do to prepare your taxes, what you need to take into consideration. If you are not confident going through the forms yourself, or if you're unsure about specifics of federal, state, local taxes related to the things that you're selling or the services that you're providing, I encourage you to seek out a tax expert, have them walk you through what you need, give you a deeper understanding of the forms themselves, just to make sure that you're covering your bases and you're not setting yourself up to be audited. So again, this is just to give you a starting point. This is by no means professional tax expert advice. This is just a starting point. Right, so a quick overview, we're going to talk about your taxes related to selling your old personal items, your taxes related to selling handcrafted items or flipping items for profit, and then independent contracting. So this can be a wide range of things, but based on some of the other stuff we talked about, this would be like driving for apps like DoorDash, Grubhub, Uber, Lyft, that sort of thing. You're considered an independent contractor when you work with them. So when selling your old personal items, these are things like items sold at a yard sale or one-off sales of personal property. This is not for things like selling items on Etsy or other things you intend to flip and sell for a profit. So again, yard sale or a pair of shoes or selling a pair of pants, that sort of thing. As long as you sell the item for less than the original purchase cost, then you do not have to claim it on your taxes. So for example, you buy a pair of shoes and it initially cost you $75. You later turn them around and sell them for $20. You do not have to claim this exchange on your taxes. If you sold those shoes for $75 or more, you would have to claim that. If you sell an old personal item for more than the original purchase cost, but had not intended to do so, so you're not setting up a business, this is kind of unexpected, then you do need to claim it on your taxes. You would report that profit from the sale as a capital gain on a Schedule D form. So for example, you post something on eBay, like an action figure for a short auction. You originally bought that action figure for $15, but throughout the course of the auction, that item ends up selling for $40. So if you're not selling multiple items, you're not setting up a store, you're not doing this consistently, then you would use that Schedule D form to report any profit that you made. So we'll take a peek at the Schedule D form. This is one that I do recommend if you have the opportunity, you go over it with a tax expert, because it can be a little bit difficult to work through on your own. So you'd have to report either short-term or long-term capital gain, and that's based on how long you've owned that product prior to selling it. So like I said, this form can be kind of confusing. You'll take the information from this form and then you'll put it back into your regular tax form. So if this is the situation you're in, I suggest consulting with a tax expert on handling this specific piece of it. So let's say that you are not just selling something kind of one-off, it didn't unexpectedly end up like selling for more than you paid for it, or you're selling some items that you've made. You'd be looking at this section here. So selling handcrafted items or flipping items for profit. You'll want to track your expenses and your sales. So you want to keep track of your costs for purchasing supplies, marketing, and other business-related expenses. So if you purchased a pair of shoes that you're then going to clean up and then sell for a profit, you'll want to make sure that you take into consideration the initial cost of the shoes that you purchased, and then the cost of supplies to go about refurbishing those shoes. If it's something that you made, like if you're doing handmade blankets, the cost of the yarn or fabric or thread would go into this. And then you'll also want to track your sales. So you'll track all of your expenses. You also track your sales. Even if you're using something like PayPal, Venmo, or Square to accept payments, you'll want to make sure that you keep a separate transaction history for yourself, because using those, depending on if you have it set up as a separate business or not, then the information that they give you may also include your personal transactions that do not have to do with your business. They may or may not also send you a 1099-K, which we'll take a peek at as well at the end of the year, which is why you should make sure that you keep track of your transaction history. Because if they do not provide that for you, you'll want to make sure that you have record of all of your transactions with customers that purchased items from you. So now we'll take a peek at the 1099-K. So this is what the 1099-K looks like. So if they do provide this for you, this will have information already filled in for you, similar to like a W-2 or another 1099. And then you'll take this information and you'll plug it into specific pieces of your income tax form. So if you use something like TurboTax or that, it will prompt to ask if you have a 1099. You'll use this information to complete that section. If you're doing it by hand, you'll want to go through and make sure that you're finding the specific locations that this reported income would go into. This can also help you identify what state taxes you may need to pay. And we'll go into that again in a little bit. So if you use these services, you're responsible no matter what, whether you use PayPal, Venmo, et cetera, to handle your payments, even if you take cash, no matter what, you're responsible for your federal, state, and local taxes. If you use those third-party payment services, they will apply the federal taxes to the transaction, but they may not apply your state sales tax or local taxes. Not all platforms will handle state sales tax. So you'll want to consult your local treasurer's website or a tax expert to see what additional taxes you may need to consider while filing your state taxes. So to file your federal taxes for this income, you'll use the Schedule C form to report income and expenses. This is where you'll report not only your the money that you've been paid for the products, you'll also report your expenses, because you will only be taxed on your income, which is, or on your profit, which is your income minus your expenses. And this is why it's really, really important to track your expenses and make sure that you double check your income. So we'll take a look at the Schedule C. So profit or loss from business is what this form is. This is an older form, so it may look a little bit different, but it will have some of the general information. So you'll put your information as the proprietor of the business. If there's a business name, you'll do that. And you'll kind of move through the different steps here. So your gross receipt, your expenses will be itemized based on the type of expense. So you'll see number 8 says advertising, car and truck expenses, commission fees, labor, rent or lease, office expenses, that sort of thing. So go through this step by step to work through and determine what your actual profit is. After a certain amount of profit is reported, the self-employment tax will also be applied. So that tax covers Medicaid and Social Security, and it only applies after a certain threshold is reached. That threshold changes, so you'll want to make sure that you consult the IRS website every year, checking out the self-employment information to see what the threshold is and what percentage that tax rate will be. If you do report a loss instead of a profit, so your expenses is higher, your expenses are higher than your income, that loss can be deducted from your taxable income through an itemized deduction. So you'll be doing an itemized deduction if you want to report that loss and have it covered by your other tax credits or your other income. So now to talk a little bit about independent contracting. This is for income generated by offering a service to the general public with no direct oversight on how it is done or what specifically is done, such as driving for Uber, Lyft, DoorDash, etc., or being an independent graphic designer working on specific projects for various companies. So if you're not directly employed, nobody's telling you your schedule, you're just working on your own terms. or you're hired for specific projects but are not considered an employee of that organization. So similar to selling handcrafted items or flipping items for profit, you're going to want to track your expenses. So if you're driving for one of the apps, Uber, Lyft, DoorDash, etc., you'll want to make sure you track your mileage. So how many miles you're spending between each stop for the job. So driving from your house to the restaurant to their house, from their house to the next house, whatever mileage you're using up while driving for deliveries or for transportation for Uber or Lyft, you'll want to make sure that you track that somewhere. There's some recommendations as far as just typing in to a spreadsheet your odometer reading at the start and at the finish, or just keeping track of, I drove 5 miles, 6 miles, 13 miles, and keeping the number that way. It's up to you and what makes the most sense for you and what will make it easiest for you on the back end when it comes time for tax time. If you're doing other work, you can also track your mileage when you need to drive to a client or business. If you're printing items that the business that you're working for, the client you're working for isn't covering outright, you can cover your printing cost. Things needed to complete the job. So if you need a specific type of computer or specific software, you can claim those as business expenses as well. Now, you'll want to check the IRS website for current mileage rates. So this does change every year, and there are different categories related to the type of driving that you're doing. So you'll want to check the website to make sure that you have the most up-to-date, accurate information when it comes to putting in your information for your mileage. You should receive a 1099 from either locations you worked with or apps you drove for. So we'll take a peek at a 1099. It looks kind of like a W-2, except for it's not quite as robust. So they may not take out as much taxes, or there may be specific things that they're not covering or taking into consideration for you. But when you receive this, it will be filled out for you. It will have all the information that you need to then take this information and put it into your tax forms. So once you get that 1099, you have your mileage and other expenses. You're going to use that same Schedule C form to put your in your pay and subtract your expenses. For mileage, use the miles you drove for work times the current IRS mileage rate. So if the IRS mileage rate is 56 cents per mile, you would times the mileage that you drove during the year for your job or your jobs to times that 56 cents, and that will give you a number that you can put into the form as far as an expense. Similar as having a cell phone business, doing crafts or selling items for profit, you may also be subject to the self-employment tax after a certain amount of profit. So similarly, it's based on the profit that you make. So the money you're paid minus your expenses. So also make sure that you're not, that you're kind of keeping track of where you're at when you're thinking about your expenses. You don't want your expenses to outweigh the income that you have coming in. So like I said at the beginning, this is by no means an exhaustive program related to filing your taxes for your side hustle, just a guide to help you get started. Your best bet is to consult with a tax expert to make sure that you're counting all of your income, expenses, and addressing all the unique tax situations at all levels. Specifically, when we think about states' sales tax and locality taxes, some of those can be very specific to the type of product or service that you're offering. So you'll want to make sure that you're addressing everything appropriately and that you don't land yourself in a situation where you're getting audited. So again, please consult a tax expert if you're at all unsure of what you're doing or you want to have somebody double check. Thank you for joining us today. We'll be launching a new series in the fall with the Own Your Career. So please keep a lookout on our YouTube and Facebook page for more videos.